Hey everybody, Courtney Smith here with a presentation where I think we can be making some massive gold profits right now. Now this is kind of an urgent video I should say, because what's going to happen is we're about to see gold take off to the upside. Now I'm going to go into gory detail here on why. You're going to learn a lot about how to analyze gold, but you're going to learn how it all relates to right now, and everything seems to be lining up beautifully. So let's dive right in. What we're going to cover today is the fundamentals of gold. We're going to talk about supply and demand, real interest rates, Indian demand. We're going to talk about seasonality, sentiment, technicals. I'm going to create a scenario of what's going to happen, and then I'm going to reveal my trade plan. So this is not a short video. This is a great video where you will learn a tremendous amount of how to analyze gold, how to understand the gold market from a professional trader's perspective. Let's dive right in. Now, who am I? I'm Courtney Smith. I was voted the #1 gold market timer 3 years in a row. I was the #1 global macro hedge fund manager, and I managed a top 15% natural resources fund. So I know a little bit about gold. All right, let's take a look here first at the supply and demand situation. First of all, what we see here is we see the supply situation going back a number of years. And the gold line is the price of gold. That's what we're seeing there. And then we see the bars show the total supply. So if you look very closely, in 2020, we had a slight decline in the price of gold, and that created a massive increase in the price of gold. Now, supply is very steady with gold, and that's not really the thing that drives the price of gold. So let's now go take a look at demand. This is where things are very interesting. So once again, the gold line is the price of gold, but look at this, a big decline in demand for gold in 2020. Big decline. Why? Well, let's break it down. These colors are a little bit hard to see, but down here at the bottom, the kind of gray color, that's central bank buying. That dropped a pretty significant amount. Actually, this green line here shows that investment, buying gold for investment purposes, actually increased. Then we go to this kind of maroon color here. Excuse me. That's use in technology. Very stable. Here's the big difference. Jewelry demand was down tremendously. And we're going to go into detail there in just a second. But notice that big demand. This is going to be the critical thing as to whether or not we make a lot of money this year, is the demand for jewelry. I'll go into that in much more detail in just a second. One of the most powerful effects on the price of gold are real interest rates. Well, what are real interest rates? Real interest rates are simply interest rates minus inflation. So right now, for example, we could say long-term interest rates are about 2%. But inflation is now over 5%. So that means real interest rates are actually negative. If we look at short-term interest rates, which are about 0.25%, then real interest rates are about minus 5%. This chart shows that this is the lowest real interest rates have been. The chart only goes back to 2001. But I can tell you this is about the lowest real interest rates have been for decades. Maybe around 1980 they were lower. I'd have to go back and look. But this is the lowest real interest rates have been in decades. Now, why is this important to gold? Well, you see, everybody has an existential choice. Do I buy gold or do I buy something else? Let's say treasuries. Well, if I was a big portfolio manager, I would look at it and I would say, well, if I buy treasuries, I earn a microscopic amount of money. Okay, that's a good thing. But if I own gold, I have to pay for storage and insurance and financing on it. So it costs me money to own gold, but I receive money to own treasuries. But if all of a sudden real interest rates are negative, then there's no cost to holding gold anymore. In fact, because interest rates are negative, The banks are actually paying you to borrow money and buy gold. That's incredible. So it's much better off now to buy gold on margin, borrow money to buy gold, than it is to own treasury bills. So this changes the dynamic dramatically in favor of gold. So what we see here is the black line are interest rates, the red line is inflation, and so the blue line is real interest rates. And this is extraordinarily bullish for the price of gold. Now here's some key short-term indicators. The top one is the euro. You see, gold is really kind of a currency. And so you have to look at it as competing with the US dollar, the euro, the yen, etc. in the world's community, because central banks, as reserves, they can use other countries' currencies or they can use gold. So gold is largely a currency. So the top panel here is the euro, and you can see the euro has been actually weak. I'm sorry, this is dollar versus euro, and so that kind of that's not good for gold. Gold goes opposite to the dollar. So if the dollar is going down, this is euro. So if euro is going down, that means dollar is going up. So this is bearish for gold. Down here, this green line, this is the yen, and it's going up. So therefore, that's bullish for gold. And the yen is more highly correlated with the price of gold, which is this gold mountain chart here, than it is with the euro. And then the middle panel is the CRB. This is raw material prices combined. And you can see it's in a relentless bull market. And that is a leading indicator of inflation and therefore a leading indicator of gold, or a coincident indicator really. But it's also mildly bullish. Now, one of my favorite hidden techniques for analyzing the gold market is the TIPS market. Treasury Inflation Protected Securities, or TIPS, provide protection against inflation. Now follow this closely. The principal, now you see this is actually issued by the US Treasury. Okay, so when I buy a normal bond, I pay $1,000 for the bond, and at expiration, I get $1,000 back. But maybe that $1,000 is only worth $900 because of inflation. TIPS protects us against inflation. So here we go. The principal of a TIPS increases with inflation and decreases with deflation as measured by the Consumer Price Index. When a TIPS matures, you are paid the adjusted principal or original principal, whichever is greater. So if inflation is 10%, they won't pay you $1,000 back, they'll pay you $1,100 back, so you don't lose any money because of inflation. So they tell you exactly what the market thinks inflation is going to be. Well, the green line is a chart of TIPS, and the gold is, guess what, gold. And notice that the direction of them are highly correlated. Up, down a little, up, down, up, 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 until right here. And then all of a sudden, there's the first major disconnect I've seen in history since TIPS started trading. TIPS have continued to rally as inflation has gone up and interest rates down. TIPS skyrocketed. Gold, not so much. But eventually, they have to coincide. Because TIPS are so strong, I think that gold will move up to meet TIPS and break through these highs over here, which is about $1,900. Call it, let's say 1910, 1920, something like that. So gold is right now about $1,800, so that would be at least a $100 rally up to these old highs. So TIPS, very bullish. High inflation, low interest rates boost TIPS up a lot. Basically what we saw in real rates. Now this is another one here. This is an important factor that nobody looks at as well. And now we need to dive into the jewelry demand as well. What people don't realize is that 50% of the demand for gold every year is for the Indian wedding season. You see, for centuries, Indian women were not allowed to own anything that they couldn't carry on their body. So, of course, women demanded huge amounts of gold because they could carry tremendous wealth on their body. They could be millionaires with the jewelry that they had on their body. So traditionally, Indian brides are given gifts of jewelry. And we're talking massive amounts of jewelry. 50% of the annual demand for gold comes from Indian brides. So the Indian rupee is a very key indicator. Generally speaking, if the Indian rupee is strong, that makes the price of gold seem cheap, and that increases demand for gold. If the Indian rupee is inexpensive, if it's going down in value, that makes gold more expensive because gold is quoted in dollars. So here, for example, we saw a big bear market in the Indian rupee. A big bull market in the Indian rupee. This is this is rupee strength when it comes down. This is the price of the dollar in terms of rupee. You can see then the price of gold skyrocketed. Then when the rupee got weak, that's here, the price of gold dropped. Now, right here, we see that the price of the rupee is pretty stable and gold is pretty stable. So this is one of those hidden things. Now, as the incredible COVID crisis ends in India, and it's down, COVID cases are down 90% in a month, we're going to see the Indian rupee rally as the economy gets stronger. That will drag gold up as well. Now, seasonality. This is what I do every single year. I put out a presentation like this. Guess why? Because of this chart. What this chart shows, it shows a number of different seasonality of different time periods, but basically the black line in the middle here, and these are standard deviation bands around it, shows the seasonality of gold starting in August, actually the end of, here's the end of September, this low here's the middle of August, then it skyrockets up into the beginning of May. About a 4-week seasonal, and we're about to kick that off. And so we need to get prepared for it. 90% of the time in the last 30 years, gold has rallied in August. 90% of the time. Now, is it going to rally this August? Of course, we don't know. But the odds are that it's going to. If something does something 90% of the time, it's probably going to do it this year. Why? Here's because if you understand the gold market, as I do, then you understand why it rallies so much in August. Let's go back to Indian brides. You see, the Indian jewelry manufacturers order their gold in August. They take delivery of the gold, they manufacture the jewelry in September, and then the wedding season is in the fall. So every single year this occurs. It's been occurring for decades. There's no reason to believe it won't happen this year. Aha, but wait, maybe there is. We got to dive a little bit deeper into this Indian wedding season. I know you probably thought we were going to talk about monetary policy. No. Indians, that's the key to the gold market. So what happens is this. The wedding season last year was basically zero. Okay, I'm exaggerating slightly. There was a few weddings, but basically they were illegal last year because of COVID. So there's a huge pent-up demand this year for weddings. Weddings that didn't take place last year are going to take place this year. Theoretically, we could see a 50, 60, 70, 80% increase in weddings this year, which would be one of the most powerful wedding seasons ever, probably the most powerful wedding season ever, and therefore the most powerful demand for gold we've ever seen in history. Now the key is, will the government allow it to go on? Well, with the cases coming down a lot right now, there's a good chance that they will. But instead of being like double wedding season, you got to figure that a lot of people are going to be very nervous about having big weddings, and so they're not going to be as many, there won't be the pent-up demand of double, but maybe it'll be 20% larger than normal, 30% larger than normal. What if it's even just normal? Then this seasonal chart kicks in a normal way. But there is the potential that it will be larger than normal. Oh, oops, sorry, went a little too fast there. Okay, this chart just tells us, this is the commitment of traders report for gold futures. And what it shows us is this is the price of gold up here. Down here we have the people who participate in the market. Down here are commercials. This is mainly mining companies down here, gold mining companies, and they hedge their production, and so they're always short. They're below the zero line, so they're short. Well, for every short there has to be a long. Well, what's this black line? That black line, well, that's me. That's small speculators, okay? And so small speculators like me, we're net long a little bit. The most important one is this blue line. That's you. These are large speculators, people with millions and millions, maybe billions of dollars under management. I know that's you, but I'm still a small spec. But the blue line is starting to move up. In other words, the large, smart money, and this is the smart money, these are the guys that are starting to buy. So, do you want to be on the side of the smart money? Yes, of course you do. Now, another thing that we have to look at with gold is sentiment. You see, if everybody is bullish, if 95% of people were bullish on gold, who's left to buy? So we never want to buy something where people are super bullish because there's nobody left to buy. Right now, gold is at 62% of people are bullish. These are investment advisors. And you can see it's pretty stable the last 3 weeks. Each column is a week. Been pretty stable around 60%. So, and remember that gold is something that people are usually bullish on. So 60% is actually kind of a low number. This is a pretty normal number. It's not 50% like it would be for most commodities. It's 60, which is pretty normal for gold. This means that there's actually a lot of people left to buy. So as the price moves up, the sentiment will get more bullish as people say, oh, look, there's a big bull market in gold. Let's go buy it. And gold bull markets, of course, become fevered pitches of people panic buying gold, and that's one reason why they move so sharply. So there's plenty of people left to buy gold. Okay, now, what are we going to buy? Are we going to buy gold or gold stocks? Well, here's a chart. The chart itself is of gold, and the black line is GDX. Now, GDX is an ETF, which is composed of big gold mining companies. And notice something very important. In bear markets, GDX leads to the downside. In bull markets, when they finally get going, they lead to the upside. Now, right now, gold stocks are weaker than gold. This chart down here shows the ratio of them, and if the ratio is going up, it means that gold is outperforming gold stocks. So right now, the best thing we'd want to do is to buy gold, not gold stocks. Now, as this turns into a clear bull market, you'll start to see the gold stocks outperform to the upside, and my strategy would be to shift from gold into gold stocks. Down here at the bottom panel, we see the ratio of gold to junior gold miners, and that's even more bullish. So we definitely want to stay away from the junior miners right now. Okay, this chart shows the price of gold stocks, and this shows down here the bullish percentage. And I showed you gold was around 60%, but gold stocks are only 40%. And this is why later we're going to shift over and start buying gold stocks, because gold stocks have even more potential upside because people haven't bought them and because there's something called operating leverage with gold stocks. Now over here, we've got the price of GDX again, that's the chart, and this red line is the advanced decline line for gold stocks. And you can see it's a clear bear market, much more bearish than the price of gold stocks themselves. We're just seeing a lot of bad breath. So we're going to stay away from gold stocks. Now let's talk about technicals. This is a chart where every bar is equal to 1 week. And we're really in a trading range right now. Quite frankly, there's nothing on this chart that's very interesting. You know, we've got support here, resistance there, major support down here at 1675, major resistance, you know, up around 1970. So not much going on here. I don't see a lot here. Let's go to the daily chart. Oh, a lot of black lines on here. Well, all right, so let's take a look at them. So the first black line is this curved one over here, and I've got marked on here, that's what these green arrows are. These are bullish candle patterns. I know I have a bar chart on here, but I actually can, using my X-ray vision, I'm able to see candle patterns on bars. So you can see there is strong candle buying pressure here, and the market basically, that was where the support came in the market. We did see one negative candle pattern over here, and the market sold off. But we're in the middle of all that right now. We're in the middle of all that right now. So we don't want to buy a market that's in a boring status. So what are we going to do? Well, we'll get to the trade plan in a second, but one of my buys is going to be a break of this high at 1835. When it breaks that high, where this black arrow is, that's going to be one of my buy points. Remember this chart when we talk about that. I also point up here, 1919 is this high. Let me round it off to 1920. This is going to be the first objective of my bull market. So we're going to want to buy at 1835, and we're going to look at originally for it to go up to 1920. So that's about $85. If you're trading futures, that's like $8,500 profit. If you're trading stocks, it's about a 10% gain. But let's break this down in a little bit more sophisticated manner, shall we? We might also buy here. This is stochastics. The black line is %K. The red line is %D. There's a technique which I posted on our YouTube channel about stochastics, and one of the powerful, unbelievably beautiful techniques was a stochastic elbow. Now we don't, which is where the %K crosses above the %D above this line here. And that looks like what it's going to happen. Now, you want to do that really in strong bull markets, and this is not a strong bull market, but it is a potential buy point. Down here is the ADX. Now, when ADX is red or going down, it means that the market is neutral. Well, okay, I can see that up here. But if it were to turn blue, and it looks like it's about to turn blue because the rate of change, the momentum to the downside, you can see it's turning flat. We just need a few up days and it'll turn blue. ADX would then be confirming and telling you that it is a legitimate bull market if this turns up. And I think it will, with maybe 2 or 3 days to the upside. So this is looking pretty good. Okay, so I use a technique down here called the Conqueror. It'll turn bullish probably somewhere around, let's call it 1860, 1870. We've got this high here. We've got these highs here. Now remember those 3 points: high, conqueror buy, channel breakout high. Okay, let's carry on. So what's my scenario? What do I think is going to happen in gold? Well, when I put all of those things together, and of course some of them are bullish, some of them are bearish, some of them are neutral, we can say that obviously the market is in a neutral phase. But the increasingly bullish fundamentals and the potential for dramatically bullish fundamentals because of Indian wedding seasonal, and then we have one of the most powerful seasonals of any commodity at any time of the year with 90% accuracy over the past, should create a breakout from that neutrality to the upside. Now, we have a scenario. What could go wrong? We always want to be intellectually honest and argue against ourselves. If the dollar continues to be strong, we could still have a bull market, but it'll be weaker. We should also worry about central banks tightening, but I'm not really worried about that this year, and I'm certainly not worried about it from now until the end of August, which is when this trade will end, really in the first week of September. So the strong dollar, potentially a problem, which will blunt the advance, but still have an advance. Central banks tightening, I don't see that as much of a risk at all. So what's my trade plan? Well, first of all, the instrument. We're going to want to use gold futures if you're a futures trader. We're going to use CFDs if you're a CFD trader, which means you're not American. And we're going to use the GLD ETF. Boy, that was a lot of acronyms there. So the best ETF is GLD. There's also some leveraged ETFs, which I might use. But basically, we use ETFs in the stock market, CFDs for non-Americans, and gold futures for Americans. So the first thing I'm going to do is buy a break of that most recent high using my trend analysis technique. So that would be the buy point there. After that, I'm going to buy another unit of this position using the Conqueror. That was up around 1860. And if the market's still booming along, I'll buy that high at over 1900 using channel breakout. And of course, with all these techniques, I'll use any pyramiding that I can do, and I'll just follow the rules of these techniques using changing the stop losses according to the rules of these techniques, these three techniques that I teach. So that's a pretty aggressive thing. We're going to have three techniques working. All three will have normal risk parameters. And we'll use pyramiding, and you can pyramid trend analysis and channel breakout, but there's no pyramid for Conqueror. So we could build a pretty big position. It won't be a long-term trade. It'll be maybe 6 weeks long. But we can still make a lot of money if we have a big position and the market cooperates. Okay, now how can I help you? So here's the pitch, okay? Gave you the free stuff, now the pitch, but you're going to enjoy the pitch. I write the #1 stock newsletter, okay, called Wall Street Winners. I manage the #1 mutual fund in the country. Wall Street Winners is now in its 26th anniversary. It first came out in 1995. So we're one of the longest lived newsletters out there. I personally have not had a losing year in 50 years. Okay, are there credentials here? Yes. What Wall Street Winners is, it's a weekly video newsletter now. Yeah, we changed it from print to video. We cover the U.S. stock market, global stock market, foreign exchange, futures, bonds, gold. But the analysis is unique. In this presentation, you saw some of the unique analysis that we do. We look at the world differently than everybody else. Everybody else is the same old BS. But I show you what works. And so we use deep fundamental analysis. We use unique technical analysis, and then, of course, we use ninja trading tactics. And this is the combination why I had the #1 macro hedge fund, #1 stock letter, #1 mutual fund, because my analysis is unique. If you do what everybody else does, you get what everybody else gets, which is mediocrity. If you want to be superior, you have to do things differently. So the key benefits of Wall Street Winners: killer analysis, killer trades. It's to the point. I'm not wasting your time. It's actionable. I give you specific actions, where to buy, where to sell. It's as simple as can be. Which makes it really, really simple. It's only $67 per month. Cancel at any time. Now, you get the weekly video briefing with actionable advice. Now, what that does is, the actionable advice, we actually give you a trade sheet which lists all the trades on it. Where we get in, where we get out, etc., etc. So that's good. Valuable bonus, I'm going to talk about that in a minute. 30-day money-back guarantee. All of this for $2.23 per day, which is basically a half pound of Tootsie Rolls, okay? So, or it's less than a cup of coffee from Starbucks. So you look at this and you say, well, I could consume a Starbucks coffee, or I could invest the same amount of money and get more money back. So I could buy more Starbucks and Tootsie Rolls. So the free bonus is I'm going to give you my personal trading plan of exactly what I'm going to do in gold, in ETFs, in futures, in CFDs, the exact entry and exit prices that I'm going to do, and the exact instruments I'll be using. And then I will allow you to monitor my actual trading as we go on. So what is that bonus worth? That could be worth tens of thousands of dollars, thousands of dollars, hundreds of thousands of dollars. It depends on how big your portfolio is. but it's certainly worth more than $2.23 a day. Now, how do you get it? Go to WSW2021.com and you can sign up right away and start to get the bonus right away and start to make money right away. All right, so gold right now, let's wrap this up. It's neutral, but the fundamentals are starting to develop, and we're starting to get into the seasonal period where all those fundamentals start to come together, and we should see a massive breakout to the upside. If we don't, we haven't lost any money, because I'm not buying it now. I'm buying it on strength. Why am I buying it on strength? Because then that proves that the fundamentals are coming together. It proves that the seasonal is kicking in. And therefore, it reduces our risk dramatically and enhances our profit potential. So we set up the trade, we analyze the trade, we set it up, and now I'm actually going to be putting in orders. And of course, when you subscribe to Wall Street Winners, you will see my actual orders. You'll see the prices I'm entering with my stop losses and all those sorts of things. I'm going to reveal it all to you. So, and whether you're an ETF trader, futures, CFD trader, it doesn't matter. I'm going to trade all three of those. So you'll get those trades. But we've set up the scenario now. Now we need to be patient. We can put in our orders right now. No problem with that. And now we wait. And if we get filled, I think we're going to make a lot of money into the first week of September. If we don't get filled, we had a nice time. All right, everybody. Hopefully we'll see you at Wall Street Winners. Go to WSW2021.com and sign up right away. And I'll see you on the next issue.